Hey everyone, welcome to CoveredCall ETF Investing, your central hub for deep CoveredCall ETF data. Today's video, we're going to be looking at the very first delisted fund, a fund that's going to be coming off the TSX and therefore will be coming off the tracker. Now I'm going to keep a separate tab on the tracker for delisted funds specifically as long as I continue to work on the tracker, and that way it gives us an idea of what to look for better once certain funds officially come off the tracker. They're no longer live anymore. So let's get into that. And of course, as always, before we do, you like the info that's presented on the tracker, you can pick it up over on my Patreon, which will be down in the description below or the very first comment that you see. And as a last reminder, on June 15th, Saturday, 9 a.m., there's going to be a live workshop that I'm putting on through Zoom. And we're going to be going through the tracker. There'll be a Q&A afterwards if you want to be part of that as well. So head over to the Patreon. You can sign up there. You'll see a post that gives you instructions of what to do. So with that being said, let's get into the video. There's something happening in the month of June that the tracker has not seen yet, which will be included on the next tracker, which is, for the first time, as far as I've been documenting CoveredCall ETFs on the tracker here, a fund is getting delisted, meaning it's coming off the it's coming off the basically the Canadian Stock Exchange, the TSX, I guess. So you won't be able to trade it at all. So American funds are fine. We're going to cover this fund, and we're going to go through its history a little bit, because I think this is a good opportunity to learn about funds that get delisted. And it's like, when we go through this, it's exactly what I had been talking about this entire time. So we can't just ignore, say, tabs like this. Now, you guys are, I think, like, I've never heard you guys say anything along the lines of like, the AUM tracker is useless or the average 3-month volume tab is useless. You're going to see why it's important in this segment. So the fund that's getting delisted on, I believe it's June 25th, is a Harvest fund. And that is, let's try to find it here. It's a leverage fund, I believe. HBFE, it's the Brand Leaders Enhanced Income ETFs. Now these funds, right off the bat, so it's a leverage version of HBF, which nothing is happening to HBF, but the leverage version here. Let's just make sure. Like yeah, okay. It is the leverage version. I mean, it seemed pretty self-explanatory that it was, but I just wanted to make sure. Okay, so let's go through the history of this fund. Why is it getting delisted? We can see that it's a leverage version of HBF. And HBF has these other versions of this fund. It has an American dollar version. It has an unhedged version of it. So why not all of these funds getting? You're about to see in a second here. So it has a yield of almost 10%. The Harvest brand, like anytime a company brands itself with like brand leaders, or I think Evolve has a future brand leaders cover. It's just, the name is just ambiguous. And Global X recently did this with their funds. They changed the name of some of their, changing USCC over, instead of the title of the fund or the fund name being, US large cap, or CNCC being Canadian large cap. They changed it to USCC S&P 500. CNCC changed from, large cap Canadian to, the TSX 60, because those are the indexes people attune their brains to. And again, when a fund name is less ambiguous, I think there's more of a chance that, they're going to click on it. They're going to go down that rabbit hole of trying to figure out what it is. I'm not saying that the name in of itself is the barrier, but it just makes it a little bit easier. So, and I would say, the Harvest Brand Leaders Income, it's a little bit of an ambiguous name. Does that, I might think that that's just like the top companies in the S&P 500, maybe. And maybe there's a strategy for that. But anyway, let's go through the performance. We can see that over the past 1 year price performance, it's basically been mute. Again, once I include total return, we'll have a much bigger number than just 1% in there. Over the last 6 months, it's gone up by almost 2.2%. And over the past month, it's up 1.29%. Let's see. Its management fee is 0, but it's the MER, which is important because it holds HBF, which does have a management fee. So essentially, this is the management fee, but at the end of the day, what matters most is the MER. This is the total cost, leverage costs, trading costs, and custodial costs with the cost of operating the fund and paying the fund managers at 2.44%. It has leverage. As of this tracker, it has a small AUM of $3.5 million. It's got a dividend streak of 19 months. Its inception date was fairly recent, back in October of 2022. And it has a stable distribution. So now that we've gone through that, let's actually this is what we're going to look at with AUM. Does it really have anything to do with performance? Its performance is, dull. Like, it just hasn't done much. I mean, maybe if you reinvested everything. But check this out. Why is AUM and paying attention to AUM so important? And this is why I've made a change here in the June tracker where you can see month over month how these funds have changed. We got red across the board, red year to date, down almost 10%, down almost 1%, down 0.5%, down 6%, down 13%. So we started the year with almost $5 million. Already it's a tiny fund, and it goes down to $3.5 million. Now, I'm sure that if I was doing the CoveredCall tracker, say in 2023 and prior, I'm sure we would probably see more similar numbers to this. But anyway, this goes right to the heart of why it's important. If you have any of your funds and you're interested in getting the tracker, pay attention to what your funds are doing as far as AUM is concerned. Because if it's a micro niche kind of fund, it could be in jeopardy in the long term, right? So that's why we do want to pay attention to healthy, growing funds that are big AUMs and continually growing with large liquidity. Okay, we don't want you to have a fund like this to get delisted and you are down on it maybe 20-30% and you're forced to sell it off. Like, it'll get sold off for you. You could ride this fund out to June 25th. It'll still trade for the next until that period of time, but on that date it'll get liquidated, and what you'll see in your account is just whatever the liquidation is on that particular date. So red across the board, already a small fund, down almost, down 27.5% year to date. So the other component to look at is liquidity. What is the liquidity of HBFE doing? Okay, so as far as the liquidity is concerned, it's actually risen year to date by almost 19%. To start the year, it started trading at 26.16, was going down. So down, and then, oh my goodness, goes down in a in a big way between March and April, down to just 1,318 units, and then we get quite the substantial increase between May and June. Now, the reason it probably has started trading a lot higher, especially to see this jump, is all of a sudden this fund getting more popular. No, it's because people probably found out or got a notification from the brokerage that, hey, this fund is going to be getting delisted. So I'm sure people are now just selling off, right? Because it's not just when we talk about liquidity and trading, it's not just people buying the stock, it's people selling the stock as well. To see that difference is there is ambiguity behind that, but that's exactly what's going on here. HBF is getting delisted, and the trading volume is increasing wildly from May to June because the news came out that this fund is getting delisted. But overall, that's what you're seeing. You're seeing red across the board. So now that you all have seen kind of what, in my opinion, important for the long term, these funds, you got to pay attention to this stuff. You don't want to be in a situation if you own something like HBFE and you're down on the fund and now you're forced to sell off. We want that choice to be yours, not somebody else's. So pay attention to the health of the AUM. Pay attention to the liquidity through these two tabs. These are very valuable tabs. And especially if you call CoveredCall ETFs, this is your mainstay strategy going forward. I really encourage you, pick up the tracker so that you can follow the health of these funds. I've made it easier with, this would be the first month that you're going to see month-over-month percentage changes, because before that you would just see numbers. A little bit harder to digest in that regard. So anyway, if you got HBFE, you got to get out before, if you want it on your terms, you got to get out by June 25th, or else it'll be sold off to you and you get whatever, the price is that day. Hopefully you enjoyed that small little snippet from the CoveredCall ETF ALLSTAR tracker. Over on my Patreon, there is a 2.5-hour video that goes over content that potentially hasn't even been released yet. So as I said at the top of the video, head over to the description below, or the very first comment that you see, to access the tracker for yourself and level up your education on income investing, specifically with CoveredCall ETFs. And I'll make sure you hit all the buttons of like and subscribe variety, and I'll see you all in the next video.